Let's talk first about the revitalized jump in these meme stocks that we saw. It was really amazing to watch last week. Was it what we saw in AMC, a so-called gamma squeeze?
Oh, that certainly has something to do with it. There's so much flow of derivatives happening right now. And, the dealers or people that sell and write these options have to hedge their positions. And that definitely caused some of the price move, no question about it.
So what are the stocks? Is AMC still among the stocks that are incredibly highly shorted that you track at S3 Partners?
Yeah, so if you look at our squeeze risk score, it's still a 100 out of 100. If you look at the total size of the position, it's $3.6 billion. The total year-to-date loss is about $3.9 billion. And last week alone, shorts in AMC lost $2 billion in 1 week.
Unbelievable. Bob, you and I have talked about how short investors can get these stocks. Sometimes it's over 100%, which means that either borrowers are re-lending the stock that they borrowed to short.
Right.
Somehow that seems implausible, or people are going short naked. And I see today on Twitter, naked shorts, naked shorting is trending. I'm not sure if that's just because people like the word naked. Is that still happening? Is it still prevalent in this market?
Well, first of all, if someone is doing naked shorting in a large scale, scalable, systematic strategy, the gendarme should come in and just take that person or firm, off the field. It's against the law and it shouldn't be done. So, it would be, that's where we come out on it. It's just not done. The rules and regulations are very clear about what should be happen to players that do that.
On the other hand, I guess it's probably legal. If you borrow the stock from somebody, Bob, and sell it to me, I can turn around and lend it to someone else who sells it short again. So is that how we get companies that are 120, 130% shorted?
Well, in your example, what's happened is that you've increased the flow to the company. So it's really that you have 2 long positions for every 1 short sale. And that's really what confuses people. There's a lot of confusion in the marketplace about what is an actual short sale. So for example, a long agency sale is marked as a short sale, and it's not. So if a mutual fund or any investor that is long a stock sells it and the executing broker does not have that stock in its position, in its inventory, and then sells that on to the marketplace, that's considered a short sale. So there's a lot of confusion of how things are marked. That's one of the reasons why we've created on Bloomberg a IB chat room, IB space plus S3, because there's just so much confusion with the gamma hedging going on, with all these mismarking of positions, with all this talk of naked shorting. A lot of institutional investors, hedge funds, and individuals that we service in our AMA on Twitter, we thought we'd bring the same AMA to the Bloomberg universe, and we're happy to answer any of those questions. IB space plus S3, we will answer all of your questions because there's a lot of different things going on in the marketplace, and we would like to perform that service.
One of the most frequent questions you probably get asked then is, which stocks are ripe for a gamma squeeze, right? And I know you've done a ton of research. You recently came out with a white paper showing the most squeezable, stocks. Has the list stayed roughly the same over the past few weeks, Bob?
It's somewhat the same. Nikola, Blink, some of the SPAC stocks as they start trading definitely have high squeeze interest. AMC and GMA are still at 100. That's also one of the reasons why on the SI Go page on the Bloomberg terminal, we will be making access to our squeeze risk score so that everyone in the marketplace, when the exchange number is released, you'll be able to see our squeeze risk score because these things are like rogue waves. You don't see them coming until they hit you. And when they hit you, they destabilize everything. And one of the things that's interesting about what's happening right now is you see non-standard players do standard things. We saw Mudra Capital do a secondary. Why? The traditional players didn't want to, didn't like the risk. That's all these things are happening, and it's telling you that even though the dogma is the company has to issue every last share it has to pay off its debt and it's worth zero, given what's happening in the marketplace, these things can probably go on and on and on. If non-traditional players take the place of traditional players, there's really no end in sight in how high these stocks can go.